Another big story in India today is the RBI and the possibility of a rate cut coming from the central bank. Market expectations suggest that RBI, the central bank, is likely to cut 25 basis points interest rates amid a global economic slowdown. This would make it third cut of rate in a row by Monetary Policy Committee. Headed by RBI Governor Shaktikanta, he will address the fact that commercial banks have only reduced lending rates by 5 to 10 basis points over the last 4 months. Despite the central bank's 50 basis point cut over the same period, the policy will also set the stage for upcoming union budget. And given the ongoing economic slowdown with both consumption and investment engines faltering, there are hopes that RBI will use monetary policy to stimulate economy. Central bank's actions will also set the stage for the union budget that will be announced on 5th of next month. Meanwhile, Shaktikanta Das will also have to contend with a sticky transmission pipeline, with commercial banks having reduced lending rates by only 5 to 10 basis points over the past 4 months against the central bank's 50 basis point reduction during same period. And at a time new government has taken charge in India, industry here is hopeful of big reforms in the upcoming budget to rev up the economy. As the India's GDP slows down in the last quarter and the year, industry is hopeful of a rate cut coming in RBI's monetary policy announcement today. Well, I caught up with newly appointed head of CII, or Confederation of Indian Industry, Mr. Vikram Kirloskar, in this exclusive conversation. Listen in.
On the investment side, can the government do anything on the tax situation for that? Second is on the consumption side. Consumption side, my colleague Mr. Kotak was saying there's enough liquidity in the market yesterday, but the issue is the cost of the liquidity and the quality of the borrower. The other two major issues, cost of liquidity, and he's finding it difficult for the cost of liquidity to come down. He gave a lot of reasons. We're expecting RBI to reduce the rate. I hope it will get passed down, but it's difficult to get fully passed down. I think real interest rate in India is quite high. Inflation has been very, very tightly controlled. Interest rates are still pretty high. So our real interest rates also compared to the rest of the world are pretty high. So I think that should work on consumption as well. We need retail finance at good rates. So they are the two main areas on the economic area that we are suggesting. But also cautiously, see, this is where the problem starts. We can't increase budget deficit. I think India has taken a good, prudent stance over the years, and budget deficit has been controlled. It's slowly coming down. Maybe you want it coming down faster, but it's not going up. It's been controlled. There's a lot of pressure on that. So you're stuck on priorities now.
And so you just spoke about interest rate cuts. Well, RBI's policy is going to come in very shortly. So do you expect between 25 BPS to 35 BPS?
I'm not in the banking business. I'm not in the money business. I don't know how a lot of this is done, but I hope some cut will come. That's what the market expects.
But rate cut is required to actually...
I think the market is expecting a rate cut because the inflation has been steady at a low level. If the inflation was high, no chance of rate cut, or maybe there could be a rate increase also. But inflation has been controlled. It has been at a steady level, at a low level. So I think therefore a rate cut is expected.